When we started out in property investing, we knew that we needed to raise money to do property deals. We didn't have an endless pot of cash ourselves. If you've watched our other videos on this channel, you'll know that we have been very transparent with how much of our own money we've put in, how much we've had to raise, even to do our very first deal. And since then, using other people's money to make them money and make us money has been our business model. If you're new here, my name's Leah. I run a property business with my husband AK, and this is our channel where we talk about property, business, and working together as a couple. After the first few projects, we had built case studies, and I will insert some photos on screen of the projects that we were buying, what we turned them into, and we then showed this case study to potential investors about what we were all about and what we could offer them in exchange for their investment into Property Couple. And at the time, you might remember, we had many years of low interest rates. So when we started doing property investing, I think we were all getting less than 0.1% interest from saving accounts in a bank. So it really was a fantastic time for people to be investing their money with us, as we were able to offer rates much, much higher than what the banks were offering. It sounds now like in the future like an easy pitch to get people to invest their hard-earned cash when you're offering a way better return than a bank. But obviously at the beginning of our journey, we were not where we are now with the sort of proof in the pudding to say like, these are the properties, this is how much money they're making, would you like a slice of that? It was about getting that first deal done, and then the next one was easier, and so on and so on and so on. So in this video, we're going to run you through the numbers on a more recent deal, showing you how much we paid and how much we still do pay out in investor interest. How do you pay people? How do you pay yourselves? And it's very important that you always have this money set to one side from the cash flow you're making. It's just as important as mortgage payments. You never want to miss a payment to an investor or potentially tarnish that relationship that you've worked so hard to build. So it is all about communication, and I have learned that one the hard way, but maybe that's a story for another time. So let's run through the numbers on a recent deal. Here is our 8-bed property, which we rent out for £3,800 per month. If you haven't already seen our video going through the purchase price, the refurb, how we managed to secure a deal with a local housing association on this one, then you can watch that next. I will link it up in the cards above. But the main takeaway from those numbers are the following. The mortgage is £1,528. The management on this property is £456, and the cash flow is £1,815. So on this deal, we have an investor at 6% that put in £150,000. Their interest is completely fixed at 6%. There's no varying rate depending on what's happening in the market. So this investor gets their £750 a month, or if they were to choose to have that annually, that would be £9,000 a year dropping into their account for literally doing nothing, no work. They let us use their money, we pay them the rewards. So you might be thinking, okay, cash flow 1,815, deduct 750 in investor interest. That leaves 1,065, which is still pretty good every month considering not much of our own money is in that deal. And we really do like to see our business as a bit of a profit share model where everybody is winning. The good thing about that deal is that there's no bills on that one, because it's a social housing contract where they look after all of the utilities and the maintenance. So at this point, you might be thinking, if you're giving investors 5, 6 or even 7% return on their money, then you've got to be making sure you're doing deals where the ROI is at least double that. And you would be absolutely right. You do need to be looking for high ROI deals. And this is why we have HMOs in our portfolio, because you always need to make sure that there's enough money left in the pot to share the profits multiple ways, as well as paying your mortgages, your management and your bills if you are doing the traditional HMO route. Now, we don't tend to look at each property and look at how much each investor gets from a property. We do tend to look at the portfolio as a whole, the cash flow it produces, and then the investor interest that is owed. So what's deducted from the entire cash flow. But for this example, in this video, we wanted to show you something recent with deal specific numbers so that you could get an idea of what's possible. A question that we sometimes get is, how do you pay people back? That's a great question. We have an investor that put in 60,000 into that care home deal that's now an 8-bed. and they put it in for 12 months and the agreement was 5%. So with their investment, they got their yearly interest of £3,000 and they wanted that lump sum. They did not want monthly. And then after the refurbishment, you may remember that we got a new valuation on the property of just under £400,000. So we took a 75% loan to value buy-to-let mortgage out and we got 296k from the bank. And with that investor, along with others, were paid their money back to the people that wanted all their money back. So for this individual investor, it was 60k in, and then after the refurb, they got 63,000 back. Now, there's a few different ways we work with investor interest. Some people want their money back because they need it for something. They want to buy something. They want to send their kids to university. But most of the time, people love having their pocket money drop into their account every month. Like, for example, that first investor I mentioned who gets £750 a month for giving us 150k. We are basically making their money, make them more money, and make us some money. Most of the time, people don't really want to stop that flow of money coming into their account unless they really desperately need the money back for something. So most of the time people do carry on with their agreement, but it's all very specific to each person, which is why communication is really, really important. So I'll give you an example. If someone's put money into our business and we've got a contract that says they're fixed for 4 years, it's up to us to have a conversation with them just before it gets to a year left on their agreement, asking them where they're at with their money. Are they happy to keep going? Do they need the money back? And if an investor was to say, yeah, I need 100,000 back, or I only want to leave 50,000 in, or I need all of it back, the communication needs to stay really high. They need to give us notice so that we can get the money from brick form to liquid form in order to pay them back in full. And so far, so good. We've had that open communication with all our investors. And as I said, luckily, most people do want to keep their money in and keep that interest rolling into their account, especially retired people who want an income coming in rather than just looking at a number in their bank account that's not doing anything for them. I think some of our investors really benefit from having that regular income in their life to do whatever they want with, to have fun. So yeah, it's definitely a win there. Now, just going back to what I was saying about communication and keeping the dialogue open, one thing that's even more important than that is when you're using other people's money, there has to be a contract. Even if it is your best friend or it's a family member, we always do a contract, which is called a loan agreement, which is signed, witnessed, solicitors, everything. So no matter how good a relationship is, everyone who has invested with us has a contract so that both parties are protected. And when we talk about getting the money back, it reminds me a little bit of having a fixed term savings account. When you work with Property Couple, you know where your money's going. It's there in bricks. You can look at it. You can walk around the refurb if you like, although usually people don't really want to do that. Now I've got a savings account with my husband, and if we wanted to access the money in that account before the 3-year fix that we signed up for, we have to pay a hefty fee to access it. So similarly, if an investor decides with us that they want all of their money back, rather than charging them a hefty exit fee, we would just require some notice to get their money back out of bricks and into liquid, like we said earlier. I guess we're basically a bank. I don't know, are we a bank? Could you call us a bank? I'm not sure what I'm allowed to say online, but if you did want to find out more about that, then me or AK are available to have phone calls with people who might be interested. You can check out the link in our description, which says invest with us. We are always looking to build relationships with new people and help them with their current savings and investments. This is something that we are growing and we want to keep growing because it is building wealth for us. It is building wealth for the people we work with. So we like to call Property Couple our pension pot. I mean, I'm 30 and my husband is 37, and we just think there's no harm us saving from now. This is all for the future. Just a quick story. My grandfather died at 60, and at the time his family, my grandmother, were unable to access his private pension because he died too young. So, you know, there's all this red tape, there's all this small print about money that he was not allowed to access that he'd been saving into for many, many, many years. And I think stories like that just make me even more certain that building my own pension and helping other people as well is the way to go. Quick note, not everybody who invests with us is a pensioner. We also have some very young investors. We actually have an investor who's younger than me, who's doing very, very well in his businesses, and he did a short-term loan with us last year. It's not just pensioners. I just wanted to add that. This is something that could work for anyone, really. Another question we get is to do with like, how often do you pay your investors? And when you work with people, there's no rule set in stone about how frequently you have to pay them. That's a conversation that you have at the very beginning when you're working through the terms of an agreement. Usually you would say to an investor, how would you like to be paid? Yearly, monthly, quarterly? Some people like quarterly payments. And if your deal can accommodate to that, then of course, offer them what they want. If you know that you're not going to start receiving cash flow until after the first year, you might say something like, well, for the first 12 months, it's going to be yearly. And then after that first year, you can have monthly from that point onwards. You just got to be open and communicate what it is you can offer people. There's never been any obstacles that we've not been able to find a solution for. We've got one investor, and I hope this doesn't sound boastful, but they get paid in January every year. So just after Christmas, we drop a lovely interest payment into their account. I think it's about £17,000 that they get, and they just get that notification drop in. And we usually say, you know, hope you had a lovely Christmas, Happy New Year. Go and enjoy yourself. Take a little January break. And I know if I was that investor, I would not want that money to stop. So I think if I had money sitting around in the account, I would invest in me. We hope you've enjoyed this video. We hope it has provided some value about how we work with investors. You might be sitting there thinking, I want to work with investors. I want to raise capital. How can I do that? This is a great business model. It makes so much sense. The best person to ask is my husband. He has raised a lot of money into our business. How has he done that? Mostly through having conversations with people and telling them what we're up to. Even people who you think might not have money, sometimes they have the most money and they actually are really interested in what you're doing. Tell them what you've got going on. Tell people what you're up to. You never know what people have got and how you might be able to help them. So if there's enough comments saying, I want to know more about money raising, then I will tell AK he needs to sit down and do a video on money raising. If you are somebody with money in your account and you want to talk, then again, I don't really know how much I can say on the internet because we're not a bank. We're us, we're Property Couple. You guys know us. Jump on a call. Let's talk about it. Now, I hope you've enjoyed this video. If you're not already subscribed, then please do subscribe, and we will see you next week. Bye.